Hey y'all, hope y'all doing well. Um, this week was kind of busy for me. Well, not really. It actually wasn't. I still ain't feeling very well, so I've been like kind of resting and relaxing and trying to get my crap together. But the market volatile as usual, especially with a 45 president. It's going to be volatile. So um, you know, the stock market's going to react to tweets up, react to tweets down, and it's it's going to be a fun ride, I think, and we're here for it. Let's see what's happening this week. Super Bowl weekend. Oh, do me a favor, okay? If you are, let's see, if you are rooting for the Chiefs, give this video a thumbs down. Okay? Rooting for the Chiefs, give it a thumbs down. If you're rooting for the Eagles or you don't give a crap about NFL football, give this video a thumbs up. Right on. So let's get into it. I got a lot to talk about in this video. We're going to look at a few stocks. If you see here in red on the screen, I have a couple things that are in the money, and if they're assigned to me, what are my plans? And I'm going to go over the charts on essentially Foot Locker, Celsius, Dutch Bros. And I'll talk about Dutch Bros, and I'll tell you why I'm talking about Dutch Bros. But other than that, let's get into it. Let's see what we've done this week on options. I did close one option, and it was this one right here, ADM, Archer Daniels Midland. I closed it before they announced earnings. It looks like I was right to close it, but I closed it for 70 cents, profited 18 bucks, and it went down. It's currently at 45.76, and my strike was at 47.50. So got out of the way of Archer Daniels Midland. I thought about reopening them a put on Archer Daniels, but I just haven't yet. I'll have to look at it again at another time. And that's all I closed. So 18 bucks this week. That's it. But we did open a whole bunch of puts, mostly SOXL, like, my bread and butter. We're not going to look at the chart on that. It's basically the same. It's trading sideways. 23 is still the support. And I'm going to keep bleeding it until it can't be bled no more. Okay. SOXL, for me, it's such low strike prices. Each contract is, 2,100, 2,300 bucks. Yes, I got a bunch of them. But they're going to be easily rolled if that $23 support is tested. Let's see. What'd I do? SOXL went out to March 21st, did the 18 strike, got 115 bucks for that one. Beazer Homes, home builder, national home builder. They missed earnings, and then I went out to March 21st and did a 20 strike and collected 70 bucks for them. I actually wouldn't mind owning some of that. I think homes are going to be, I'm bullish on the housing industry going forward. Let's see what else. SOXL, this was on Monday, by the way. We went to March 7th, did the 23 strike, collected 170 bucks on it. And then I do own a couple hundred shares of SOXL, so I did a covered call on one of the lots of 100. Went out to March 7th, did the 33 strike, get 104 bucks there. And then today, went to SOXL, went to March 21st, did the 21 strike, collected 118 bucks. Did the March 7th, got the 22.50 strike, got 112 bucks, and then did the March 14th at 21.50 strike and collected 106 bucks. So overall this week we did sell $790 in premium. So currently premium cooking for the month of February, we got 1,962 bucks. And for the month of March, 1,444 bucks. I wouldn't mind adding a little bit more to March. So quick overview real quick. That $18.64 profit for the month of February so far was just that early closing of Archer Daniels Midland. Now on holdings, dripped a little bit of TLTW, and then I bought a few shares because some of you know I only like my shares to be ending with a 0 or a 5. So this was like at 457 shares, and I bought 3 more. CLM, same thing. I was at like 346, and I bought 4 more. Same thing with UTF. It was at 136. I bought 4 more. RQI, same thing. It was at 427 or something, and I bought a few. Let's see, what else? Dutch Bros. Okay, I think that's it for the... Yeah, that's it. Dutch Bros. I sold 40 shares today. The reason why is because we'll look at the chart, but I basically took out my cost basis. So 40 shares, I got it sold at $68. That gave me $2,700, which was my cost basis for the 100 shares. So these 60 shares are basically house money. Okay, so I didn't want to fully sell out of Dutch Bros. I mean, we'll talk about the chart here in a second. My guess is it's going to drop, but I don't want to play guesses. Just in case, I wanted to keep some, just in case it goes, parabolic, which I don't think it will, and I'll talk to you about the chart here in a second. I think it's going to drop, but I don't want to play stuff on a guess. So basically, we, pulled our cost basis out. This is all 60 shares is going to be house money, and if it does do what I think it's going to do, then I can re-enter and build back up. So that got our dividends per month up to 408.21. Our interest so far on cash, $439, so $848.22 average per month in dividends and interest. So let's take a look at the charts. Let's take a look at Dutch Bros. Okay, Dutch Bros has earnings coming up in a few days. I forget when it is. Sometime next week, I think. And we're looking at a 5-year chart, basically their whole entire timeline here. And it's right now it's sitting up at $66, $67, which is pretty, flirting with all-time highs back when it first IPO'd. The problem I see here is a lot of you guys know from previous videos where I say gaps like to be filled. And you see this humongous gap up the last time they reported earnings from $35 up to 44. I fully expect that gap to be filled at some point in time. Okay, when is it going to be? During this earnings period? I don't know. But if you look at every other gap in this chart, right, here we had a gap down on earnings, and that got filled. Let's see. Let's look for more gaps. I saw a couple more. Okay, here's a gap up on earnings, right? It was a small gap, but it's still a gap up, and that got filled on its next earnings attempt, on its next earnings report, where it gapped down, and it filled that area of the chart. Okay, and then that gap got filled right here, a couple months later. So I fully expect that to happen again. So if it does, I'll be ready. Puts will start looking good around that. If this gap gets filled down to 35 or whatever it is, puts are going to look good at 30. Even below 30, puts are going to look good, and I'd definitely be a seller in that time frame. But I wanted to keep some shares just in case this thing just kept ripping. Okay, and since it's house money, I can do that and be comfortable with it. Let's go back here and let's go to the quick view. We got Foot Locker. That's expiring next Friday at a 19 strike. And let's take a look at that chart. It's ugly. I think when I put that on, when did I put that on? Let's take a look here. I put that Foot Locker on when it was trading at $20.75. So right around here-ish. And I thought 19, which is about right there, this little divot right there, would have been okay. And it didn't hold. Okay. Just sometimes things don't hold. I think what's killing this one is tariffs. But right now it's sitting on long-term support of $17, and that support goes way back to freaking the COVID era of March 2020. You know, what do I expect here? I don't know. It's kind of a crapshoot. I would take the shares at a 5-year low, and probably sell some calls. Calls are, let's see, this will be assigned next week, right? So let's look at calls. Let's look at calls after March, which is after earnings comes out. So I would sell a March 7th call probably at 19 or 20. I'm assigned at 19. You know, a 19 strike covered call would get you about, $150, somewhere in there. If you went 20 strike, maybe you get about $90, something like that. I'd probably do that. And that's probably what I'd do with Celsius too, but we'll take a look at Celsius here in a second. So that's Foot Locker. That might be assigned next Friday, unless something, maybe a tweet comes out on shoes and gives it a bullish outlook. I don't know. Celsius, that's another one that's just been bleeding. We look at a 5-year chart here, and it's ugly. But, it's got some support down here right at about 20. I want to say, it's showing 21. But I think around 20 or so, it's probably right. It's right there at support level. So hopefully, what do I expect? I expect a beat, actually, and it's just a guess. I do not follow the news. I do not follow earnings reports. I just read the summary. I don't listen to earnings calls and none of that. This is the problem that I face. When I'm bored at home and I'm looking for premium to sell, and I get into some of this stuff. But anyway, the support level, if it were to drop and miss, I expect, $18, somewhere in there, somewhere in that range. Again, I would be assigned these on, where are we at? The 21st. So just say I'm assigned 200 shares at an average cost of about 24 something or 23 something, because I got a 22.50 and a 25. I would look at selling right after earnings, right at around the 25 mark. Hey, you get about $80 for that. So I'd probably wheel those two as well, I should say. Anything else here looking iffy? No, not really. Everything else looking pretty good. Like I said, I don't do very many single stock options, but when I do, that's like a commercial. I don't do very many single stock options, but when I do, I get burned. No, but it's okay. This is very little, not much money here, less than, 7,000-8,000, and we'll work it out. I typically don't roll. I typically do not roll options. Typically, I sell according to the chart, and if you sell according to the chart, my experience is, 80% of the time you're okay. That's the 20% of the time that you gotta look at it, and if the chart holds up, then you're good. You're good being assigned. You're okay with it. But if the chart doesn't hold up, sometimes you got to take a loss once in a while, but that's okay. So anyhow, that's all I got. If you would, down in the description box is my Amazon link. If you would use that, if you shop at Amazon, it just gives me a little small commission, about 3%, and it doesn't cost you anything more. It's just if you regularly shop on Amazon and you click my link and then go shopping, whatever you buy is going to be the regular price that you would pay anyway, and Amazon will kick me back about a 3% commission on it, and it helps out. I get about 15-20 bucks a month on that, and it makes making these videos a little bit more palatable, because YouTube just doesn't really pay and push like it used to. I don't do clickbaity stuff or nothing like that, or I don't know. Y'all know what I'm saying. Anyhow, thumbs down if you're rooting for the Chiefs. Thumbs up if you are rooting for the Eagles or don't give a crap about NFL football. Anyhow, that's all I got for you. Let me know what you think down in the comment section below, and enjoy your weekend, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.